naked trades happening now. I'll show you kind of what I'm watching this week. I've got a couple of critical pairs, but we have some interesting moves on the yen pairs today. So I'll share that with you as well, if that's something that interests you. So let's go. All right. So first off, the moves. They're turning around. The moves. I was looking at them earlier. The moves that I saw were these belt moves. So here's a good example of one. You should have the belt book in the members area where you got the link for this webinar. And so what this is the market closed here on Friday at 86.83, and then it opened all the way down here at 86.70. So it's not a big move, but it's not big enough to trade the gap. The gap's already been closed anyway, but the potential here is for a belt. So that would be where the market went up and closed. It did close as a belt, but now the market has to trade higher than that belt to trigger a buy trade. The great thing about this is in the direction of the recent trend. I think, which is up, obviously. As you can see, the market's recently been going up. Now, it could be double topping up here, but the longer it comes up here and stays at 87 and hangs out at 87, the more likely it is to break through 87. So it comes back up there and hangs out there for another day or two. That's a good sign that it's going to go higher. Now, however, if it doesn't do that, if it just double tops and then falls, maybe not. Now, I think the safest way to trade these is to wait for this 4-hour candle to close and see if it closes as a nice big bullish belt. Just keep in mind that 87 level resistance is right in the way, so to be very careful how you trade this one. Now, if you look at CAD yen, you see a similar thing. Market's been going up, drifted down, came down to where these lows are, and it printed a belt. Again, we haven't seen the market trade higher than that belt yet, and it may make sense to wait for this from a 4-hour chart perspective. And in that way, you can see if the market is going to trade higher than trade higher than the high it's already made. Now it's got 3 more candles to go, so we've got 1 candle. We're working on the 2nd candle, and then the 3rd and the 4th before this will actually end up being a closed and done and dusted CAD yen 4-hour candle. Same thing here with the New Zealand yen. This one's looking a little bit more bullish because it hasn't traded as low as the other ones, the CAD yen and the Aussie yen. So this one, again, it didn't close in a really nice 1-hour belt formation because it closed a little bit too low for that. However, it still could give us a really nice bullish, trendy style of bullish belt. Does everyone see that? What is a belt? A belt is a gap opening, and then the market reverses and goes completely the other way and closes up near the extreme high or low. So for a bullish belt, it closes up near the high, ideally right on the high or just off it. And for a bearish belt, it'll close right on the low. But again, it has to have that gap opening to get that belt effect. Okay? Sometimes people get confused between belts and big shadows. A big shadow doesn't necessarily have to have a gap. In fact, most of them don't. Whereas a belt must have a gap. All right? And a belt, it doesn't necessarily engulf the prior candle, but a big shadow has to. I know I get a lot of questions about the difference, but they are quite different. Here's another one. This is the 1-hour Swiss yen 1-hour belt. Again, you can see it closed here at 115.14 on Friday. It opened today all the way down here at 114.86. So 86 all the way up here to 09 is 25 pips or so, which is just on the border of what we're looking for a gap trade. The problem is it's already closed that gap. So the way to trade this would be to wait for a 1-hour candle to trade higher, or to see if the 4-hour candle ends up being a really nice bullish belt. And if that's the case, you trade this just as you would any sort of ordinary trend entry. You could almost treat this like it's a bullish, trendy kangaroo tail, right? That's another way to do it. Okay, so that's cool. All right. Great. All right, so that's that one. Any other ones that you guys see that you like? I noticed that there's the potential for a 4-hour belt on the Swissy. See the Swissy right here? You could argue that we've bottomed out and maybe made some sort of a double bottom. I don't really like this as a double bottom formation. I think it's more of a consolidation, but you can see it has touched where it has before over there. It could go up, close this gap, and print a really nice bullish belt on the Swissy 4-hour. And then the yen, of course, similar to some of those other ones we were looking at, the yen could give us a nice big fat 4-hour belt too over the next 3 hours. So that's it. All right, let me just see if I can find questions. Any questions that you guys have on any of the pairs? Let me know. If you have any questions? If you don't have any questions, that's cool. But that's kind of how I see it from a naked point of view. Oscar is wondering about gold USD. Okay. Yeah, so everyone's going long gold. All right, so okay, Oscar, are you thinking of going long off Friday's Kangaroo tail? Is that kind of what you're thinking? I wouldn't. I don't know if that's what you're thinking, but I can say that I definitely would not do that. Here's why. Yeah, okay. Not really. You're just wondering. Okay, cool. Not really. Okay, so here's okay. The big picture. Okay, so step back, look at the weekly. What's the big picture? The big picture here is that essentially from July, gold's been going down. I know it's got a choppy retrace move. You can see it came back up and retraced off of these lows here and then fell. That seems to be what's happening here once again. And if there's any questions about that, just look at the line chart. See where it bounced here several times, 1, 2, 3 times. The market bounced off this 1200 level or 1213 level. It's come back up and it seems to have done that again. It didn't give us a really nice bearish big shadow. It closed a little bit higher than I would like to see. And the range isn't really the largest range we've seen in the last 6 candles anyway. This candle is larger. However, if we put on our bend trade hat and say, well, is this a bend trade? Certainly looks to be like it could be one. Now, we would need the market to trade lower than this candle, though. So that's got to happen if you want to take a weekly bend on gold. Now, besides that, you could also take a daily trade. Now, here's how I would do this with the daily. I would look for a retrace between now, right now, this moment, and Tuesday's London session. Somewhere between now and Tuesday's London session, I would look for gold to get up here to this, where this little shaded area is, and sort of bounce off where it found support with, essentially 1, 2, 3, 4, 5 candles found support there. And then we would expect it to bounce off of that level and find resistance. Now remember, the big resistance is where it kind of may have double topped up here around 1215 or so. But I think a pullback between now and the London session on Tuesday is really the call. We typically on Fridays and Mondays will see pullbacks, and I'm looking for that sort of pattern to emerge where the Friday bullish sort of mini kangaroo tail is just a sign that we're in a retracement mode now, and then we're going to bounce off this and fall further. Exactly, short-term retrace. I'm with you on that, Oscar, 100%. So, what are some things that would invalidate this view? Well, if the market were to close above, say, on a daily candle, close above 1201. If it were to close above 1201 at any time this week, that would invalidate that. Obviously, if it came back up to 1215, 1213 area, again, that would invalidate it. But as long as it sits here and does a little tiny mini weak-looking retrace, you could get a brilliant signal, for example, on the 4-hour chart, and you could sell off of there. So I like the gold chart. I think it's ripe for a sell. And the people who are looking at the bullish kangaroo tail and getting in on that, that's a trap to me. That's a really ugly-looking trap. Let's take a look at Lakeith's trade or chart, because Lakeith wants to see the New Zealand CAD and which time frame. Hey, Noel. How's it going? Daily. Okay. Daily. Lakeith is looking at the daily. Okay. And you went long on the kangaroo tail I'm guessing you went long on the trendy kangaroo tail right here. Is that correct? No. You went on a four hour. Oh, you went short. Where did you, okay, where did you go short? Off a daily candle. Which daily candle? I'm gonna on the 23rd of January. Okay, sorry. All right. Okay, you went short on this candle right here. All right. Well, I don't really see it. Okay. Why did you go okay, what was the pattern that you were looking at? Because okay, let's just show you what you saw. Okay, so everyone sees you saw that pattern right there and then you went short. Is that correct? There was a 4-hour kangaroo tail. Okay, so you're not on the daily, you're on the 4-hour. Okay. My mistake. All right. This to me, this is a very bullish pattern. In fact, I have statistics on this and I will publish those soon. This to me is a bullish pattern. When you see a huge bullish move and then the candles sit up at the top of that bullish candle, that's usually a trend continuation. Okay, so when I see this daily, I would be looking to go long. But you saw a short opportunity on the 23rd, so somewhere over here, maybe you saw a. Okay, so maybe it was this candle right here. Okay, so I don't know. Maybe it was that one, or okay, you're looking at this one perhaps. Okay, so what happens is, yep. Okay, so here's the problem with this one. I'm not even going to talk about the daily chart, which suggests it's quite bullish, right? I'm not even going to talk about that. Let's just ignore that for the moment, and we're going to talk about your setup itself. Here's why this is a bad setup. And I know it's people are going to say, "Oh, that's hindsight," and that's true. But it's also a bad setup if you I don't know if you've read the book, but let me ask you this question, Lakeith. How much room to the left does this candle have? How much room to the left does it have? Anybody have that answer? How much room to the left does this candle have? Almost none, right? Almost nothing. In other words, this candle right here, this bearish kangaroo tail, all right, that you see has not extended beyond the recent price action. In fact, it is wholly contained within the price action of the last two candles. Okay? The only reason why I would take a kangaroo tail that doesn't have a lot of space is because if I was looking for a trendy kangaroo tail, which by definition is always going to have price action to the left because it's going in one direction. So for example, this one. This is not a trendy kangaroo tail because the close is not inside the previous candle's range. But this is the type of kangaroo tail that you would say, okay, well, I'll overlook the fact that it doesn't have that much space. Because why? Because it's been going up. The market's been going up, and I'm taking a trendy kangaroo tail in an uptrend. But you're taking a reversal candle. The market's been going up, and you're saying it's going to go down. So in that case, you must, and I cannot emphasize this enough, you must have space. Your candle should have extended up to here, and you should have been able to pull across space like this, okay? Something like that. That would have been a good sell signal. And another clue I'm going to give you right here. Again, I know you can say, "Whoa, Walter, this is hindsight." Actually, no. If you go back and watch my videos on kangaroo tails, you'll know that when we list the rules out, what do we say? Open and close for a bearish kangaroo tail. Open and close in the bottom third. Open and close inside the previous candle's range. Both those ticks those boxes, right? That's true. The next candle, or if not the next candle, the one after that, must trade lower. Now, of course, that did happen in this case, right? Because we did go lower on this blue candle right here, so that's fine. But it also must have space or room to the left, and this has none, zero. And optimizers are that the open and the close would be in the bottom 10%, which it isn't in this case, which is okay. And then also, an optimizer would be if the candle itself penetrated the support and resistance zone, which in this case it hasn't, and then the head of the candle did not penetrate. Now, does that make sense? So if we were to say that the candle penetrates the zone, but that the head of the candle doesn't and stays below the zone, that would also be an optimizer. Does everyone see what I'm talking about there? So in other words, it would be a candle that kind of looks like, here, let me just see, like, whoops. So the candle would look something like this. Like it might go like this. Hold on. I'm going to make this like black, okay? All right. And then the head of the kangaroo tail is down here like this, right? And we'll make this red. I know this looks really weird, but this is the kind of thing we'd be looking for here. Okay? So these are the kangaroo tails that are great, where the tail goes beyond the zone and then the head is down below the zone for a bearish one, right? And whereas this one, it's only just barely even brushed up against the zone. So and then I'll give you one more thing, okay? One more thing which might be a little bit kind of difficult to see or advanced or whatever you want to say. But really, I would ask you, when you look at the line chart here, is this a double top? What you see right here, is this a double top? Let me ask you that. You got to touch here, and then you got to touch here. Is that a double top? Is that a double top? Could be, right? Could be. Shame on me for not looking at room to the left. That's okay. There's a couple of other clues here. One is that it didn't go through the zone. The tail didn't go through the zone. And the second one is, if this is in fact a double top, if this were to be a double top, what would happen? This line chart should bend down quickly, okay? It should bend down quickly, all right? Now, we haven't even got to your kangaroo tail yet. We're not even at your kangaroo tail yet, right? But look. It's flattening. Look at that. It's flattening. It's not bending down. If this were a double top, you'd see a hit, it'd move away, it'd hit it again, and it would move away quickly. And instead, what we see here is, again, the fact that it's flattening and hit it again. That's 3 touches. When we get 3, 4, 5 touches on a zone in quick succession, that usually means breakout. So at that stage, you could also say, because at this stage, you'd have to say there's 3 touches on the zone. 3 touches within 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 candles. 3 out of the 13 candles hit this zone. So that's another red flag. And then the 4th one, that's a big red flag. Obviously, you already stopped out, so the trade's over. So hopefully that makes sense. So the daily chart gave you a clue with a bullish pattern. It didn't really make a double top. It was more like a triple, which is ugly. It didn't have space. The tail didn't go through the zone. Yeah, couple of clues there. Anyway, hopefully that helps. Any thoughts on the New Zealand CAD short? Right now, I would not. So this is a really tricky chart. So this is what I would say about this chart. Okay, see how the market went bullish and then it went like this? Okay, that's usually a trend continuation. But we have 3 candles here. Usually it'll spend 1 or 2, maybe 3, and then it'll gap up again, or not gap up, but launch up again. It didn't. And then you get this trendy kangaroo tail, which is fine. You go, okay, well, maybe I'll go long off the trendy kangaroo tail, right? But it never trades higher. Look at this. The high of this next candle is at 95.56. The high of your trendy kangaroo tail is at 95.56. So if we were to put it up, 6 pips above the high plus add the spread, you're looking at 95.67, 95.66. It never got there. And then it almost blows out the kangaroo tail and engulfs it. It's almost a busted kangaroo tail. And then it comes right back up. This, to me, is a completely confused market. It's range bound. In fact, if you went to the 4-hour, you could probably draw a box around all this price action and just say, you know what? It's range bound. We've got a lower end down here, an upper end up there. And until it breaks out this box, I'm just going to ignore it. So I wouldn't short that one right now. Yeah. Oscar says, what are your thoughts on the pound pairs, like the pound yen and the pound New Zealand? Yeah. So I talked a lot about this in the forum last week at Naked Forex Now for for those of you that are members, obviously. But let me sort of quick and dirty. Okay. I'm going to delete all of my crud here so it's easier to see what's going on. All right. Now this is how I view the pound. I know this is the pound dollar, but all right, well, let's go to the pound New Zealand and the pound. What do you want? Pound New Zealand and pound yen. Okay, that's fine. Let's do pound New Zealand and pound yen. So here's pound New Zealand. All right. So there's a couple of things that are important here. Number one, this zone right here is just really critical. That's 174.75 basically. And the other one is down here. Okay? Now, there's another one up here around 79.50. And those are basically the most important spots. Okay? So let's zoom in on that. So what we're saying here is, first of all, we had a gap last week, right? So that gap here was closed on day 2. If you've studied your stats, if you've looked at the gaps, normally the first one they'll close within a day or two, and then if they don't close within a day or two, they usually close by Friday, by that end of the week. If they don't close by the end of the week, they're probably not going to close for a long, long time. So, but most of them, the large majority, will close within 48 hours, which is exactly what happened here, right? Now, in fact, you could almost argue that this wick closed it. I mean, I know it didn't go to the close, but I would count that as a close when the wicks touch like that. So it went up, and it's kind of having trouble getting through this next level, right? The pound New Zealand. I think that I wouldn't want to go long the pound New Zealand unless it were able to get through 1.7475, trade higher, come back down and bounce. So I'd be looking for a bullish bounce off of 74.75 after it breaks into this area, comes back down and goes boing, and then I would buy it all the way up to here, 79.40, right? That's going to give you, likely to give you maybe 300 pips on about 200 pips of risk, or maybe 150 pips of risk if you're lucky, and 320 pips reward, or something like that, right? The other option is that it could inch up here and it could print something like a bearish kangaroo tail off this level. You could argue it hasn't actually hit it and then sell it off of that sucker. That's option 2. So it could come up here, it could get to this area, it could fail, and then you could sell that sucker south, right? Now, what's nice about that is you've got a really beautiful area here as support. Now, there's another one further down here at 1.6730, right? But the first target would be right there. So let's say it's in a flat line here, comes up, prints a bearish big shadow or a bearish kangaroo tail, we could sell off there. So really, to me, it's at a crossroads. And if it breaks higher and then bounces, I will go long up to here. If it can give you a sell signal by inching a little bit higher, because there is a gap, to me, there is a gap between these wicks and that zone of about 50 pips. So it could still go a little bit higher, 50 pips higher than fail. Sweet. And then pound yen. We can look at the pound yen too, no problem. Where is my pound yen? Pound yen, pound yen. I will get a new pound yen right now. Pound yen. Okay, pound yen. All right, pound yen. We'll go red, white. Little bit different look, isn't it? Okay, so pound yen, we got this spot down here, certainly got this spot up there, you got this one right here, you've got this one here, and then you've got this one here. Now this could be a shoulder, head and shoulder, but the problem is we didn't really bounce off the neckline. Does everyone see that? So this could have been a shoulder, head, and shoulder, but it needed to come back up here and fail basically where this candle is, and it didn't. It got back up. So this is a very bullish formation. It's a little bit more advanced because it's gone through that level, unlike the pound New Zealand. So I would be looking, like I said on the pound New Zealand, I would be looking for a bullish bounce off of 143. 143 or 142.90 comes down and bounces off that, and then you could go long all the way up to 147. So that could end up, that, depending on what that looks like, that might be, about 150, 200 pips of risk for about, 250 to 300 pips of reward, depending on what the candle looks like. Does that make sense? Cool? Cool, Oscar? That's how I see it. So to me, this has already gone back into the head and shoulders, and we need to confirm this breakout, and then we'd be sweet. Sua says, what about the Aussie CAD? Is it a double bottom? I think we have one. There we go. All right. Okay, double bottom, double bottom, double bottom. On which time frame, Sua? Cool. I'm glad that makes sense, Oscar. So definitely the easier one right now, like in a better phase, is pound yen to me, not pound in New Zealand. Sua says, daily Aussie CAD, double bottom. No, I don't see it. I definitely don't see it. It could make a double top, I guess, if it were to come back up to this level, right? Like if you were to get it to come back up here, you could argue that it's a double top, maybe, if it were to come up here, right? That level, but nah. Yeah, I don't see a double bottom here at all. But maybe a double top. To me, it could be a double top depending on what happens. Euro pound says Oscar. Euro pound, euro pound, euro pound, euro pound, euro pound. Which time frame, Oscar? We'll do it right now. Daily. I like the red, and I'm really into the red and white template now. It just, whoa, what was that? Some sort of silly template? That's not red and white. We want this one. Okay, so, whoa. Eesh. I think one thing that I want to point out, guys, is, so this is in the forum here, and we had some talks about this, the open position ratios. I think it's really important there. I had a couple of losers last week. I had a couple of break evens, a really good home run on the pound. But I want to talk about this. Hold on a second. I'm going to get off the forum here. And I want to show you fxjake.com/risk. Okay. I think the euro pound was approaching a level that's important. So let me, not risk. It's not risk. That's the risk calculator, which is good. You should know your risk of ruin for sure. But I'm going to go to crowd, fxjake.com/crowd. It's going to send me here. And the reason why I want to show you this is because the euro Swiss and the euro pound are at extreme levels. A lot of traders are going long those two, which means it's probably going to fall, and we could short it. The euro pound is not really at extreme levels. I was going to see here if we could go long the euro pound, because it kind of is the opposite of the pound Swiss. Not really though, and not quite there. So okay, so yeah, so euro pound. No, we can't really go long, but I would probably look for an example of a potential double bottom here, right? Like on the 4 hour. So see how it's bounced hard off this level? If it were to come back down and give you another nice, say, like a whammy bottom, that might be a trade on the euro pound. But it really needs to give you a strong sign that it's doing that. It's at a perfect spot for a trade. It just needs to give you the pattern. And to me, that pattern would be some sort of double bottom on the lower time frame, like a 4 hour double bottom. That might be something to trade off of. But other than that, I wouldn't. And now, I think that the pound Swiss, which I just mentioned, and the euro Swiss are two that we could also trade off of, right? But we need the price action. We need the pattern. We need the pattern. If we get the pattern, then we can take the trade. But the reason I point out those ratios is because they're really good at telling you when everyone's piled in the wrong way and you can get on the other side. I just have to wait for a reason to get in on the other side. Cool. Yeah, so the two things we need to obviously are, you hit the zone level, you get to a zone, and then you get the pattern. You need both. Yeah. So we want to get a really good pattern, but not just anywhere, right on the zone. So you're right. The zone is the spot to look, but it also has to give us the pattern. Yeah. Kareem, what's your opinion on the pound? Yeah, I talked about the pound New Zealand and the pound yen. It's kind of a similar thing. You can see here the pound is at a critical juncture right now. If it can break above this level, 27.20, trade higher and then bounce off that, you could go long. If, however, it gets to this critical level, which is really close, in a lot of ways this is very similar to the pound New Zealand chart that we just talked about. If it comes up here and prints a failure, like a kangaroo tail or a moolah top or a big shadow or something that says, yeah, it's not going to work, then we could short it off that. So it really depends on what happens, I think, this week. It could just chop around here and not make it, but I think it's going to test it. And once it tests it, we'll know. If it prints a huge bullish candle right into the teeth of the zone, it's probably going to break it. But if it comes up there and starts getting wicky and double tops or something like that, then it's probably going to fall away. So it really depends on what the pattern looks like when it gets there. You're long the pound? I would hold. I would either slap a trailing exit on it, Oscar, or hold until you can take some profit at 27 or 26.90. So that's another 100 pips. I would probably look to get another 80 to 90 pips out of this if you can. And then you could also put like a trailing exit on the 4-hour. Oh my goodness, a bird just slammed into my office window. It's a huge cockatoo. That was weird. He's staring at the charts. I didn't know cockatoos were traders. Okay, cool. Oh, that's funny. Oscar, are you in Australia? That's so funny. He just scared the crap out of me, Oscar. Yeah. So cockatoos are those big, huge white birds with yellow, like little fluffy feathers on their head. Oh, there he goes. Boy, that was weird. Okay. It's never happened before. All right, so yep, so those are my thoughts on the pound. And I will say this, given what we see right now with this formation, it's very bullish. To me, this is a very bullish pattern. You could put a 4-hour trailing exit or something like that. But unless it double tops right here, it's probably, if it gives you a double top right up here around this area, which would be around 26.50. Unless it gives you a clear double top, I would think that we're definitely headed to 26.90. Definitely. So cool. Probably trying to catch a kangaroo. I agree. Cool. All right, guys. Hey, thanks so much for your time. If you're in the private forum, we'll see you in there this week. We've got a couple of webinars for our members lined up and some goodies for members as well, the Naked Forex Now forum. So look out for that. When I say goodies, I'm talking about trading tools. So we're going to release those very soon. So I'll put that link in my thread in the forum to register for the webinar. And of course, the recording will be in the forum too. Thanks, guys. Have a wonderful trading week, and I really appreciate your time. I hope you have a great week. Thanks, Noel. Thanks, Oscar. Take care, guys. Bye. Thanks. Bye. See ya. Bye, Robin. See ya. See ya, Kareem. Take care.